Welcome to the True Wealth Podcast, where we specialize in helping aspiring homeowners break into the real estate market and help investors create and build wealth through real estate. We will be sharing some of our best advice around real estate so you can purchase your first home or reduce taxes and achieve financial freedom. Your host, Seun Adeyemi, is a certified financial planner, mortgage professional. Financial freedom is possible when you have the right mindset, coaching, advice, and community. So, let's get real.
Welcome to the True Wealth Podcast. I am your host, Seun Adeyemi. Thank you for joining us today. Today, we're going to be talking about exploring the U.S. real estate market. If you heard my podcast maybe a few months ago, I interviewed one of my other colleagues, Arthur Lichmore, talking about is Canadian real estate, well, specifically, is Toronto real estate still viable for investors? And the clear-cut answer was no. But I've been thinking about that over the last several months, and I'm actually getting angry at the U.S. real estate, at the Canadian real estate. So take this as maybe part two of my rant, because not only do the numbers not make sense, one of the things that has been aggravating for me and even my clients recently is the landlord and tenant board. It has become increasingly pro-tenant and anti-landlord. Matter of fact, I have clients who for the last 2 years have been struggling to get rents from their clients or from their tenants, and they are unable to kick the tenants out because the landlord, one, there's a serious backlog that even when there's an issue with evicting a tenant for non-payments, it takes so long to get a hearing. And even when you do get a hearing, a lot of these tenants have become so wise or learning how to skirt the rules that they're given excuses, and some of these hearings get extended, giving them an opportunity to stay in these houses without even paying rent. In addition to that, tenants are now seeking financial compensation to move out from these properties after not even having paid. I heard of one recent issue where a tenant was asking for $100,000 just to move out of the house. So the landlord is basically captive in their own home. They're not collecting rent, and they can't kick out the tenants. And so that had me asking, why should a landlord risk, or why should an investor risk their funds in the Canadian market? Yes, I know that's specific to Ontario, but I'm not sure it's that much different in Calgary or other parts of Canada. I'm finding the rules are skewed highly to the tenants, and so the investor is a bigger risk. And so the question then is, if the Canadian market is not really conducive for investors, where can investors still put their funds and have access or have an opportunity to actually generate income and generate passive wealth from their real estate? That's where the US side comes in. And so for the last several months, I've been doing a lot of research into the markets, into where can I find alpha? Where can I find returns for my client? And that's where I ran into Beyond Borders with Dr. Chad Carter. We met on Instagram, and today he's come on the show to tell us a lot about the U.S. real estate, why it makes sense, what happened. He's going to share his own story, his journey, what he's experienced, what he's learned, and how his company Beyond Borders can help investors who are looking to invest in the U.S. real estate market, how they can begin to build passive income and what opportunities exist. Dr. Chard, thank you for joining us. How are you doing today?
I'm doing good, Sean. Thank you very much for having me on. It's great. I'm happy to be here.
So I learned about, like I said in my intro, I learned about you, and we've talked back and forth. This is actually the second recording of this episode.
Yeah, some technical difficulties.
The first time we recorded, for some reason, his video and audio didn't show up. So we're doing this again, but there's so much information. Tell us a little bit about your journey, your story. Tell us a little about who's Dr. Chad, what do you do, and how did you get into the U.S. market?
Yeah, so my profession, first off, so I'm actually a chiropractor. I've been practicing in Toronto for over a decade now, and I went to school in upstate New York, and this was in 2009 to 2013. And while I was out there, I obviously lived on campus my first year. I was just outside of Syracuse. And then after that first year, I moved off of residency and I was a resident and I was living with a few individuals and we rented a house that was maybe a couple minutes from the school. It was right on the water. It was a big house. It was beautiful. And we were all paying at that home about $500 a month, and there was four of us, so it was about like $2,000 a month for this house. And it was just really interesting because when we actually looked at like the purchase price of this house, what the individual who owned the house, what they bought it for, they had bought this house for less than $100,000.
Hmm.
And at the time you're just like a broke student, you don't have any money or anything like that, but you have the ideas in your head like, hey, if we could acquire a property like this, in a student city or town, then you can make some really, really good money off of this type of purchase. Because obviously, if you're renting something for $2,000 a month and you paid less than 100 grand for it, that's a pretty good return on your money. So it's always kind of stayed with me. It's always stuck kind of in my head. And my father is a builder in Toronto, so he's in construction, and I've always lived in a house that has always been under renovation. Literally since I was a kid, I'd have like one bathroom available because the other one was being like renovated, or just I've always grown up around it. So I have a kind of a fair deal of like experience with housing and rentals and construction. So it's always been something I've been interested in. And then even the summer before I went to chiropractic school, I wrote my real estate exams, but then I got accepted to school and I didn't think that I was going to use it. It was silly. I should have kept it. And now I know because it's full circle. Now I'm doing this. I'm investing in real estate and learning everything about real estate, and we're growing a portfolio and a business. But at the time, I didn't think that it was going to be of value. So I stopped and I did school. I came back to Toronto. I've been practicing ever since. And about 5 years ago, I went back and started investing in U.S. real estate once I had some funds and some money and some partners that believed in the idea. And we jumped in, and it's probably been one of the best things I've ever done.
So how much did you end up buying your first property for? And that's the first part of that question. Second part of that question is, did you own a property in Canada first, or you just went straight to the US?
Yeah, so we had a family property so I've always rented. I rented even after obviously I went to school and I came back. I've rented a home, and but my family has always had property, and my father bought a house in Toronto that was like a secondary home that we renovated, and we did a major renovation to it, and I ended up moving into it. So I lived in that for a little while, and then we actually sold it in the pandemic. But yeah, so like personally, I've rented, I've lived in my own personal or our family secondary homes. And now I'm actually renting again because, I strongly believe in right now anyways, the kind of rent where you live, own where other people rent, that model, like I'm a strong believer in. Yeah, until I have, you get to that number where like I want my mortgage to be paid by my tenants and all that kind of stuff. So like we're working towards that. But that first home that we bought in the US was $86,000. And I went into that property with two of my best friends, and we were looking for a place to buy, not necessarily in the States, but just a property to rent in general. We put in an offer on a place, a pre-construction or a deposit on a pre-construction building in Kingston by Queen's University. And we did the numbers on it. Just wasn't making sense at that time. So I said to them, hey, how about we decide to go back to the US? I know the market. I went to school there. Let's buy a place there. And we did. And we bought it for $86,000. And we still own it today, 5 years later. And we rent it now. It's a 3.5. We'll call it 3 bedrooms and a den, kind of, or like kind of like an office. But we rent that house for $1,500.
So even 5 years ago, $86,000 was a pretty good deal.
Very good.
Right?
Very good. Yes.
How much did you rent it out at
that time?
At that time, yeah.
Yeah, our rent was $1,280 when we first got it.
So $1,280 on an $86,000 property, and let's even assume, what did you put down to purchase that property?
$21,000. Yeah, as Canadians, you have to put down 25% minimum for the most part, like with any land. Yeah. So we put down $21,000. We spent about another $9,000 on renovations. So call it just around 30,000 all in USD on this property. And it was cash flowing at the time, I think probably around $400 a month, like just like after everything, mortgage, property taxes, insurance, maintenance, vacancy, property management, you name it. So about
Hmm.
$400 US every month it was cash flowing. So it was a pretty substantial cash on cash return
Hmm.
for us at that time. So we started to notice like I think we're onto something. Let's
Right.
continue this path.
So how did you even go about
Mm-hmm.
finding the property? Because one of the questions I get is, I don't live there. I don't know anything about
Yeah,
those properties. How
yeah,
do I begin to even, where do I even start?
yeah.
So I know
Mm-hmm.
you went to school there.
Yeah.
So was that the reason why you decided, let me start there first because I know it?
Yeah, I think it was. I think if I had not gone to school there and not lived there for a few years, I probably would not have had the insight to
Hmm.
go and do that and not even know that it's possible. I didn't even know that it was possible even after I got back. It was just something that we were looking at options here in Ontario, and we weren't seeing what was making sense for what we wanted to do and the amount of
Hmm.
money that we had available to us. So it was kind of one of those like, hey, what can we actually do? And then it was like, let's look in the US. Let's see if this is possible. Let's
Right.
see where we can go get funding. And I did the research, did the homework, realized we could use a Canadian bank to go in and
Hmm.
pull all of our Canadian information, pull our credit history from Canada, job information, and they could
Hmm.
pre-qualify you just as easy as it is to pre-qualify you for a Canadian property, except it was in the US. And they financed in all 50 states. So it was kind of like a no-brainer. We went,
Hmm.
we got pre-qualified, and we were able to do it. So once we started to notice that, then I thought to myself, okay, there's something here. There's other ways, and
Hmm.
you dive deeper into it, and you realize like, hey, Canadians are the second biggest owners of U.S. real estate, right?
Hmm.
Billions, right? Billions of dollars of this, right? Some of the largest institutions that we have in Canada invest in U.S. real estate. So you realize that, you're not really inventing the wheel or anything like
Hmm.
that. But if you follow the money, you'll follow and you'll see that there's a lot of people going there and there's a lot of people being successful doing it. So, yeah.
So the biggest hurdle an investor may look at is, okay, financing. How do I even begin to get financing?
Yeah.
But once you realize that all the major banks will find,
Oh, I think your audio cut off a little bit. Can you hear me? Yeah.
yes,
Yeah, I'm here. I hear
okay.
you now. I don't know what happened. Maybe it was just cut off.
I think I hate the mic. So
Okay.
one of these most people that helps them get over that hurdle is when you realize that all the five banks, all the major banks can finance you, whether it's in the US or in Canada.
Mhm.
That opens a lot of doors at the very least to start
Yeah.
saying, okay, well, I don't need to have US credit. I don't need to go to, at least to start with, I don't need to go to a US or an American lender. I can use whichever bank I use right now, and they can finance me
Yeah.
they can give me an approval based on
Yeah.
all my Canadian information.
Mhm.
That is at least a good starting point, because when you think about it, if I need to qualify for a property in Canada,
Mhm.
just a decent, even cash flowing property, let's even say you're able to find something for 400,000.
Mhm.
Highly unlikely right now in today's market
Yeah.
in the GTA. 400,000 with interest rates where they are, it's hard to qualify the average person even at a hundred
Yeah.
thousand dollar income.
Yeah.
Let's even say a combined household of 120, $30,000 income. With
Mhm.
interest rates where they are, by the time you do this stress test, you may not even be able to qualify for that $400,000 house.
Yeah.
But now you flip over to the US,
Mhm.
just about 2 hours drive, give or take, from
Mhm.
Niagara Falls or even from St. Catharines,
Yeah.
and you're buying a house down just across the river there, and you're buying a house for $120,000. Your
Mhm.
Canadian income, which is, let's say,
Yeah.
household income of $130,000, all of a sudden you see, wow, I can actually qualify for a mortgage on the
Yeah.
other side of the aisle. And
Yeah.
so I think that's the first roadblock to get past, is that my income, my meager income, which cannot get me a house to live in Canada, or even to invest in Canada, I can take that same income and my savings. I mean, when I look at the numbers you gave us here, $400,000 US, give or
Mhm.
take $45,000 Canadian,
Yeah.
was able to buy them a house, was able to buy you a house and cash flow 400,000. Now, granted, that was 5 years ago,
Yeah.
but even till today, I'm part of a few sites and I'm able to look. You can still get decent properties
Yeah.
for
Yeah, you can.
140, 150.
Yes, you can.
So that's not even that far off from the average Canadian to
Yeah.
begin to look and say the US side of things may actually be viable considering where my income is.
And that's
So,
why don't mean to cut you off. That's why we created Beyond Borders, like our company, right?
mhm,
Which is because we realized that, even that 400,000 that you just spoke about, I mean, 400,000 in Toronto doesn't even get you a parking spot, right?
right?
So, yeah. So like when you realize like, hey, the value, like the average home price across Canada or across Ontario, I'll speak on Ontario, is $885,000 is the average house price. Exactly. Right. Now, the markets that we go to and that we're looking at, those same average homes are anywhere between, let's call it $200,000 and $250,000. So, one third or a quarter of the price of
Hmm.
what you would pay for in Canada. So, and also the rents do not trail that far behind,
Right.
even at those price points. So when you're looking at the purchase to or the rent to purchase price, it just makes sense mathematically of
Hmm.
why you'd want to invest in some of these locations, just strictly from a cash flow point of view. And also the markets are not as cyclical as Toronto. So they're
Hmm.
not like spiking, dropping, spiking.
Right.
And you constantly have to time the market, right? Like
Hmm.
in Toronto, you could do fantastic if you're on the right part of that wave. If you catch
That's
it
right. That
going
curve.
up, yes, if you catch it at the right point, you're going to do great, right? But you could also be on the opposite side of that and, talk to people that have bought their homes within the last 2 or 3 years.
Hmm.
They're probably not at the right point on that wave right now because
Right.
they bought at such a high point, and the homes might not be worth that, right? So they could be a little bit underwater. So when you look at that, sometimes it's a little bit better from an investment point of view, especially if you're talking about cash flow, to go
Hmm.
into a market where it's more affordable. You're gonna cash flow positively every single month, and it just it just makes a lot more sense. It just makes a lot more sense.
So, what do you say to an investor that says, well, I'm
Mhm.
not familiar with this market.
Yeah.
How do I know
Mhm.
what neighborhoods are good,
Yeah.
where to buy,
Yeah.
and it looks good in the picture,
Mhm.
but and I may drive there and it looks good, but
Mhm.
there's other factors to
Yeah, for
pulling
sure.
that plug.
Yeah. So what we do is we use metrics, right? We study our markets pretty heavily. And the things that you look for, which are population growth, home price appreciation, household income, crime, poverty, all those metrics, we study them pretty seriously. And when you're looking at that, it's going to give you a really good picture about where you should be buying and where you should be putting your money, right? Because if you see the positive trends on that, it's going to point you in the right direction. Now, we look a little bit deeper as well. Sometimes I'll use major corporations. And, before in when we tried to film this the last time, I was telling you, I'm an avid golfer. I love golf. I golf with my buddies, and I just, my knees are broken, my ankles are broken from playing basketball and all kinds of other stuff. So now I like to golf. But a major company that I follow like religiously is a company called Top Golf, and it's like a huge entertainment company in the US, but they're also a real estate company. They require a lot of land in the cities that they go to and that they venture into. And if you actually look and see the zip codes that they even put their facilities in, the zip codes are amazing. So when you're looking at whether it's the Starbucks model, Top Golf, whichever major company that you're looking at, they're strategically doing their homework. And we try to do the same thing. Either you're following them and doing your homework, or you're using your own metrics and you're
Hmm.
selecting markets. And then the last part of that too is for us, proximity. So I invest in upstate New York. I invest in Michigan. I do have a place in Alabama. But for the most part, we're looking at cash flow heavy markets that are in the Northeast, and the proximity to where we are, if we needed to I'm not going to, but if I needed to drive to them, if I needed to see them and touch them for any reason, I can get there, and it's, a couple hours drive, and it's not a big headache. So, we're still using proximity as something that just makes it a little bit easier, at least mentally.
Right.
But for the most part, you're using metrics, and you're using big corporations and other companies and seeing where people are going. Like, what are those driving factors?
So when I think about, if these corporations are opening factories, you look at Amazon, you look at all this population growth, they're seeing things that the average investor is not seeing.
Correct.
And one of the things that helps with the population growth, if they're moving into a space, it also means they're most likely providing a lot more jobs. If they're providing a lot more jobs, that means there is influx of either the existing population there, or there are people who will be moving there to get the jobs these companies are providing. And so typically I find that helps the real estate prices over time. And that's why you see the slow increase in the value of these properties, rather than just the speculation that we have in the GTA, where there's this, except for the last 2 years, there's this idea that real estate is always going to go up, and it's going to go up drastically. I remember back in 2020 or 2019, 2020, I kept saying this real estate market it's going to come down at some point. And I got laughed at. I'm like, no, look at, they've been saying that since 2017. They've been saying that since 2015.
Forever.
They've been saying that forever. It's not going to come down. And lo and behold, see what happened in 2020. Those who bought at the peak of the market, 2021, 2020, 2021, early 2022, they're underwater now. And that's because of this high speculation on real estate prices consistently going up. And they're not looking at the fundamentals as what's driving the prices. In the GTA, speculation was driving the prices. When you look across the border, it's population growth and all these other data. Now, there's some that would argue that, well, Canada has had a lot of population growth, there's all of this immigration, which is true.
Yeah. But
when you look at the numbers, is the incomes, which is the other part of the data you're looking at, the incomes or the average income in this city or in this metropolitan area, does that match up to the value of the house prices? So yes, there's population growth. But when that population comes in, what kind of jobs are they holding? The income that they're generating, is it enough to buy houses where these people are moving to? And when you look at the GTA, the answer is no.
Yeah.
But when you look at all these parts you're talking about, the average income for these jobs the people living there can actually afford to buy homes in those areas. And so those are metrics that the average investor should be following, is where are these companies moving to? And that's where you see the slow appreciation of the prices. One of the mind shifts I had to do when I started looking at these US properties was I realized that you're not seeing massive increases of you bought this property for $400,000, it's going to be worth $800,000 in 2 years. And that for me was a massive change in that, okay, well, it's not quite that high. But in the US, I'm still seeing increases, though not as dramatic, but I feel actually those are more sustainable in the long term. Because like you said, we're not getting this big wavy jumps. It's more incremental. And especially because you're buying at such relatively lower prices, your cash flow is more sustainable, because even though rent is also going up there, it's not the rent compared to the incomes. The rent they're paying compared to what you're paying on the mortgage is relative. There's a bigger difference, and there's a bigger upside on those places.
Yeah, I think also too, like in the US, it's very market dependent, right? Like Miami and New York City are very much like Toronto, where they did have those big swings, and it's very cyclical, right? But where we focus on, it's not that type of environment, right? We're still looking at secondary cities with decent sized population, but let's just say their markets or their areas where they're on the come up, they're going up now. That's the wave that you want to be on, right? So you want to get into markets where they're just getting off the ground, so to speak. People know about them. We're in Rochester, New York, Syracuse, New York, places like that. You have a major chip or semiconductor factory, the largest in the Western Hemisphere, actually, supposed to go into Syracuse, New York, from a company called Micron. They're going to spend over $100 billion developing this over the next 20 years. That whole region of upstate New York, which already has the population, Syracuse has got 500,000 people. Rochester's got 500,000 people. Rochester's got 750,000 people. Buffalo's got over 1 million. That whole corridor should get, over the next 20 years, start to get revitalized because it's gone through some rough times. The same with Michigan and losing the auto industry, but different industries coming back, right? So you want to get into those markets when they're now starting to come back up, so you can ride that wave to get the appreciation. But at the end of the day, you're still always looking for cash flow at the end of the day. So it's very market dependent in the US. You just got to be really, you got to have conviction for what market that you really want. You got to do your homework. You got to realize that neighborhood by neighborhood things change. You could be in a great neighborhood in the US in a certain city and walk around the block and it changes very, very quickly. So you really got to either know what you're doing or, shameless plug, you got to work with a company that, like Beyond Borders, like what we do, who studies this all day long and knows the areas and where to go to and can provide you with that information and can send you properties or whatnot that are in those areas for growth. And that's how it works. And, I think at the end of the day, for us as, millennials and our demographic, people that look like us, I think it's super important for us to get into ownership as soon as we can. And price points in Toronto or Ontario or Vancouver or some of these bigger markets in Canada are so difficult, and you don't have someone to help you get into these properties. How do you ever start building wealth? Like, Black Canadians, Black Americans, we're at the bottom of the food chain when it comes to ownership. Like we own the least. Now, if you really want to look at it, just own in general. It doesn't really matter where you own so much. You just got to get into the ownership game. Let time do its thing. Everything will go up in value over time. It does, right? And then you can turn that into something if you want to take that money and put it somewhere else or grow a portfolio. But, you really want to strongly advocate and educate individuals, especially millennials, especially individuals that look like us, and just say, hey, listen, you can get into a market that's a lot easier. You can be humble and say, I can afford to get into this market and start your ownership career.
The other roadblock that I hear frequently is, it's so far, I know nothing about the place. I don't know anybody there. How do I manage a property that's so far away? And what do you say to that?
I mean, obviously management is property management in general is difficult, whether you are in the city that you invest in or that market is halfway around the world. I mean, I know investors in Toronto who have all kinds of headaches managing their own properties here, and they can go visit them anytime they want. I think it really comes down to, one, just overcoming that mental hurdle or barrier that just because it's not in your own backyard, it's that much harder to manage. I think sometimes it's actually easier because it's like out of sight, out of mind, so to speak, right? There's ways to have property management companies on the ground for you. I self-manage all of our portfolio, all of our properties. We have agents, we have contractors, handymen, electricians, plumbers. We have a Rolodex of individuals that we use and we keep track of to help us manage it. It just makes it a little bit easier. And then just vet your tenants. You got to vet people. I mean, that's just it. You got to look at those things. We mentioned before, like I do a lot of something called Section 8 housing, which is essentially, a government sponsored program. And we use that to kind of help make sure that our tenants pay their rent. So there's just something to know that every first of the fifth of the month, you're getting your rent. So the property management it can be a pain in the butt anywhere you are. But if you do your due diligence up front, you can mitigate that. And a lot of those states too we invest in, they don't have the same landlord and tenant boards as it is here.
That was actually one of the questions I had. Two questions I had is, one, what's the landlord policy like in
Mhm.
terms of the places you guys are looking at?
Yeah.
And then two, you mentioned something about section 8. Can you dive deep? Tell us a little more about what that is exactly.
Yeah. So the landlord and tenant boards where we are. So it's interesting because we invest, let's just say, a lot in New York State, New York City. So to back up a little bit, red states and blue states usually have different type of obviously politics, but then they have different type of landlord and tenant rules. Some are more landlord friendly and some are more tenant friendly. And red states in general are usually a little bit more landlord friendly. And then you also have something where you could be in a blue state, like New York in general is blue, is a democratic state. However, you could have certain parts of it which are also very red, or kind of swing on the Republican side. And the rules or the landlord tenant board in those specific areas within that state benefit the landlord a little bit more.
Mhm.
So you got to be a little bit more specific sometimes as far as what area you're looking at. But in general, it's not going to be anything like Canada or anything like Ontario as far as when it comes to evictions and things like that. Like it's you hear horror stories in Ontario,
Mhm.
and I mean, I'm not saying that there's not horror stories in other places in the US. There are, but it's just in general, it's a little bit easier process down there. It's a little bit more straightforward, anyways. And then Section 8. Section 8 is a government sponsored program. Renters can go and basically get something called a voucher from the government, and they can be put on this voucher program. And what that means is anybody can list their house for rent, and any of those tenants or any of those renters who have a voucher can apply to rent your property. And
Mhm.
what they'll ask you is, do you accept a Section 8 tenant? You could say yes or no. There's nothing against anything, right? But what it basically does is it allows a renter to get into a property that they may not necessarily be able to afford otherwise, or an area otherwise, right? Because they're looking at maybe properties in better neighborhoods. And Section 8, the rents are geared towards the number of bedrooms and something called fair market housing prices, right? It's determined by the Housing Institute in the US. And
Mhm.
they will tell you specifically how much that home can rent for, and they will cover 80 to 90% of what that tenant is going to pay. So the tenant only has to pay a small portion. So it's a very good program, one for the landlord, because they know every month they're going to get a check or they're going to get their rent paid consistently. COVID, I got 100% of my rent from some tenant from the
Mhm.
government for some tenants because maybe they lost their job, things like that. But Section 8 is great, just especially for tenants that want to go into maybe a better neighborhood.
That's a really interesting program because when I
Mhm.
think Section 38, as a
Section 8.
Canadian, sorry?
Section 8, not
When I
38.
think Section 8,
Yeah.
as a Canadian, I'm thinking
Yeah.
OW, I'm thinking co-op housing, which unfortunately on the Canadian side is more limited to specific neighborhoods. And
Yeah.
so as an investor, those are not necessarily the places I want to buy a house. But you said something that Section 8, you can buy a house anywhere in any neighborhood, or at least you can get approved to rent a house in any neighborhood.
Yeah.
And so as a landlord, I'm thinking, okay, so if I accept Section 8 and I have a tenant and I'm
Mhm.
buying a property in a decent, what they consider B or even A class neighborhood where
Mhm.
you get good cash flow, but you also get good capital appreciation. I'm
Mhm.
also getting a Section 8 tenant. It
Mhm.
means that at least I know that they can afford, with the government's backing, where I'm buying. And so as a landlord, that gives me a bit more of a bit more confidence. Like you said, in 2020, when the pandemic happened, people lost their jobs.
Yeah.
Well, the government's going to continue to pay. You're going to get that check on the first or on the fifth or whenever that payment comes in, and that helps augment whatever else they have to now supplement, if any, for paying your rent as a landlord.
Yeah.
So I think that's a good program that,
Mhm.
as an investor,
Mhm.
that should give you more confidence that, well, maybe that's something, if I'm going to go into the US market, that's something I should consider accepting because that gives me a bit more guarantees as to the income that I'm receiving. And then
Exactly.
obviously, but backstopping that is vetting your tenants, is
Yeah.
doing your due diligence, the kind of
Mhm.
job they're working, their
Mhm.
their payment history, their credit
Mhm.
history, all of those things, which I'm assuming Beyond Borders helps with vetting all those tenants to ensure that you're getting
Yeah.
quality tenants in those properties.
Yeah, for sure. Yeah, we make sure that if we are putting a tenant in there for our client, we do all the background checks. We make sure, to the best of our abilities,
Hmm.
that we're trying to put the highest quality tenant in a rental. But then also we want to make sure that we also have a good product for them too. So it goes
Hmm.
both ways. Like, we're not in the business of being slumlords or anything like that. We
Hmm.
want good product. And then we also want, a good renter or a good tenant to be in there and treat it like a home too, right? And some people complain about the Section 8 program and say, oh, or are scared of it. And I shouldn't say complain about it, but are scared of it because they feel like the tenant may wreck my place or things like that. But you have to realize, for the most part, these are families, young families who have children, things like that, that they're not looking to lose that voucher status. They're not looking to damage your place, not pay their portion of their rent. And then all of a sudden they lose the ability to have the rent, like the voucher. Like, who's gonna rent to you after that? Like, you've already,
Exactly.
you know what I mean? So like,
Hmm.
I think you kind of minimize the risk a lot of investing over there by using a Section 8 program. I'm not saying that they don't pay more than market rate, right? You
Hmm.
might be able to get 2,000 market rate for something, and then they might be only paying 1,700. But sometimes peace of mind and knowing that you're going to get that $1,700 no matter what, sometimes that works out a little bit more to your favor than saying, hey, I'm going to stretch for this tenant. If they're going to pay me, $300 more, but what happens if they have a bad month at work? What happens if they
Right.
get laid off?
Get laid
What
off.
happens? Yeah, like all those, you're not going to get that, right? So then all of a sudden you're in a deficit, and that Section 8 tenant who may have been paying you a little bit less, it just keeps
It's
on
just
going.
steady. It's
It
just
just keeps
steady. It
steady,
goes back to the rule
steady,
of
steady.
investing, right? It's just slow and steady. It's not necessarily the getting the home run on the
Yeah,
purchase. It's not necessarily trying to get the max rent. It's getting
right.
the rent that would service your expenses, but also give you a little bit of cash flow, because in the long term, that helps to also build your investments to maybe
Yes.
even multiply that in real estate investing by one, by more two properties. Or
Yeah.
when you're buying quality, you're buying in the right neighborhoods, then there's chance for better capital appreciation in the back end that you can then use to once again multiply your rental units. Honestly, this has been great. There's a lot that we could probably dive into, and I'm not sure we're
Yeah.
going to have enough time.
Yeah, yeah.
So
We talk a lot. Yeah. Yes, yes.
there's a good chance we're probably going to have you back on. Um,
Mm-hmm.
Before we go, talk a little bit more about Beyond Borders.
Yeah.
What does it look like from
Yeah.
start to finish?
Yeah.
If you have, if I have an investor that wants to
Mm-hmm.
employ you guys to help with that process, what you provide, and where they can find you, how they can reach out to you.
So first off, Beyond Borders, our goal is to become like the premier platform for Canadians, millennials, to go to learn about cross-border real estate. So we want to be that educational platform for Canadians to go to, that get all the information. So we're going to have ebooks. One's going to be coming out very, very shortly. It's almost completed. Courses, masterminds, just to build that community of education around U.S. investment for Canadians in general, and how we can grow it and how it's beneficial to Canadians. So that's the first part. And then the second part of that is to have an education, an investment arm to that. And
Mhm.
basically what that looks like is we are consultants. We walk you through the process as an individual, and we tell you kind of from A to Z how you want to either get into that first property, structure your deal, the taxes associated with it, estate planning, anything that you need to know to get into that first property, and then the ones down the line, subsequent properties, how to
Mhm.
kind of go about doing that. But we walk you through the process, we hold your hand through it, and then from there, depending on how things go, sometimes we even look into saying, let's JV on a deal. We brought you a deal, you like it, we like it. Maybe you don't have all the money. Maybe we're going to join in with you. We'll do a joint venture with you as
Mhm.
well. There's different ways to work a deal. We create it, we meet with you, we sit down, we see your goals, what you're looking to do, and we try to put together like the best plan of action for you to
Mhm.
start that career. But ultimately, Beyond Borders is for millennials, individuals like us who are looking to get into real estate, period. Get in the game, get started, buy something, own it, and be an owner of real estate, and let that grow over time, because the sooner
Mhm.
you get in, the faster it will multiply, or the
Mhm.
better it will multiply, the more time you have to allow that to happen, and the more you can do just long term. So yeah, we just want to be that site to help people. And if they want more information, they can definitely seek me out, and I'm glad to speak with them.
Well, Dr. Chad or Dr. Carter,
Whichever one, but it's not.
I never know which one to call you, but
Yeah.
I will put your contact information in the show notes.
Yes,
This has
sir.
been awesome. This has been fantastic.
Yeah.
There's a lot of things we didn't even get into, like ownership structures,
I know.
the metrics you look at when you want to buy the property, what numbers, what are the ratios. We kind of touched on a little bit, cash on cash, ROI, all of those things. And maybe we'll have another conversation about that. But at least I think this is a good one to
Introduction
get
for
started.
people. Yeah, it's introduction. I think it's good. It's good. We can get into the nitty gritty later on, and bore people with all the numbers, all that stuff that they that they want to know. But it's good to have this conversation and dialogue. I'm happy that you brought me on to speak about it.
Thank you very much for your time, Chard. I really appreciate it.
For sure, man. Thank you.
You've been listening to the True Wealth Podcast. That's all for today. Join us next time. Thank you.
This is all the time we have for today. Thanks for listening to the True Wealth Podcast. Don't forget to rate, share, and subscribe to the True Wealth Podcast on your favorite podcast platform. Follow us on Instagram, Twitter, or Facebook at True Wealth Pod. We'd love to hear from you. Share your thoughts, ideas, and questions with us on our social media platforms, or email us at podcast@truewealthadvisors.ca. And who knows, your question might be the subject of a future episode.